Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, which are of a number of stocks that either I hold or hope to accumulate over the course of the next week or, weeks. And so this is my weekly trading plan. I put these out every Saturday or Sunday for members. It costs 99 cents a month to become a member. And I do think that there's a lot of value with this because I have been talking about a lot of dip buys, and we did get a lot of those levels hit on Monday, August 5th, when the market did pull back, and then we have since gone up since then. So, I do think that this is a really nice aspect of the channel. Thank you to those who are members. And if you're not, like I said, it's only 99 cents a month. And I do put these videos out every single Saturday or Sunday, before the market opens on Monday, so we can have a plan, or at least I share my plan with you guys, what I plan to do and the levels that stand out to me. But that's all for what's going to be on X. I'm going to include timestamps to the video on YouTube, and this will be coming out next Friday. That would be on the 16th, after the market closes, so you can have access then, but you can see all of the tickers that are covered in this based on the tweet that I put out. So, now that I've said that, let's get into the charts and my nifty little spreadsheet. So I've previously been doing this based on screenshots from these spreadsheets just because I kind of wanted to keep some more like other numbers and stuff, more personal stuff out of this. But I just kind of copied these tables from that spreadsheet into one for the weekly trading plan beginning on August 12th. And so here, looking at this, got the covered calls up here on the left from last week, on the right for this upcoming week, additions that I've made, and some of the call options and puts, whatnot that I was getting alerted about from Unusual Whales. And then I also do have some weekly stuff down here, really just focusing on mainly being on either buying the dips like what we saw on Monday the 5th, or swinging calls and puts based on Unusual Whales. Made some money on them, lost some money on them, but that is how it goes. And so I'm just going to get started with AMC. I'm going to try to keep this video to an hour or less, but we'll see how I do. And so looking at the covered calls from last week, I did sell these for AMC, and from all of the covered calls that I sold last week, I made about 32 bucks. So, it's a nice way to make a little bit of money. And all of these strikes for AMC are $10. That's the maximum strike that I could pick for calls. My average happens to be now, I've gotten it down below 10, so I think I'm about $9.90 per share. And so, I would be all right if I got rid of some shares at 10. I'd prefer to not. I think price will eventually go much higher than that. But I'm just doing this, smaller orders just to make a little bit of money on the shares that I do hold. And so this is something that I do every week. And, like this one at the top made $4 that expired worthless. So I, because we didn't close above 10, so I was able to make $4 on those. And then these other contracts, they expire this coming Friday. So, if the price of AMC closes above 10 on Friday, August 16th, then I have to get rid of these 400 shares. So that kind of sucks, but it does, help me manage my risk and whatnot. So I do think that is nice. And then moving forward for the week, I do think that there could be a lot of upside for AMC pretty soon in the next few weeks, largely because of, what might be going on with Chewy, GameStop, AMC, all of that. I did put out a video on Chewy and how it's possible Roaring Kitty has bought a bunch of calls. So I do think that could be sending like the meme stocks higher. So I don't want to be, getting rid of all of my shares at 10 if AMC does squeeze. But so just to start the week, I got these two calls that I will sell, covered calls, to make, not too exciting, but $3 on them. We'll get the first one, those shares back on the 16th or after the 16th, after we close. And the other one I will get back the following Friday. But then looking at shares, looking at what I did last week with AMC, I did have, excuse me, an addition set for 6 shares at 460 that got filled. And then I did, on the weeklies down here, whoops, I did add a good amount more. And, I placed this order for 10 shares at 448, and I almost placed an order at 420 for another 10, but I placed it at 410. That did not get filled. But now, I do have a number of AMC shares that's divisible by 100 shares. And so the next time that I will be buying AMC shares will be based on selling cash secured puts to get, increments of 100 shares rather than just getting them individually or, by tens or, however I would do that. But then now if I flip over to the AMC chart, we can see here that the low on the 5th was at a price of 441. So, 420 wouldn't have been filled in that sense, but there was a, gap down, before the market opened. And so the low was actually 414.1, almost to 410. And I think that's a nice example of why it's good to not be greedy about levels and, also to just have fun. 420 would have been a great dip buy. But now, regardless of that, I did accumulate more shares over the course of the rest of the week, just doing, basically one share buy every day. And then I did buy, I think, 6 shares at $5 a share after close on Friday, just so my share count is divisible by 100. And so, I'm happy about that. The next time that I will buy AMC shares will be based on selling a cash secured put. But, I do want to point out, because I mentioned 448, that does kind of correspond with this 786 level here. Also, let's see, this is 441. The 786 is of this white retracement. So kind of like right in between those, but closer to the 786. That's why I did buy some there. But, would have been nice to get more at 420, having some fun. But, oh well, I'm glad I picked up more shares, and now I can just be, accumulating more comfortably and, in larger chunks. And so the next dip buying level for AMC would be 475. Didn't get paid on Friday the 9th, so I'm waiting until next Friday. Then I'll have a little bit more to be able to buy more aggressively. So this week's kind of light. But if I were to sell a cash secured put to accumulate more shares, I would probably do it with price right around, $5. I'd probably place a limit order to sell a cash secured put with a strike of $5 a share, but set my limit to 25 cents because then my average of those shares would be 475. So if I were to do that, that is how I would do it. And the reason why I picked 475, same reason as before, it's because of this blue retracement coming down to the 786, which is at 473.3, right around 475. So that is the level that I personally would buy at. And if we do look at the options table for the August 16th coming up, we can see that, let's see, to buy a call, it's 17 cents, $5, makes sense, it's right there. Or to sell, and by makes sense that the ask and, oh wait, sorry, I need to scroll to the left. There we go. Okay, so to buy, it's 17 cents or $17. The last, that's what I was talking about. It makes sense. But really what I mean is the bid or the sell is 16 cents. So if I wanted to pick up 100 shares at 475, I would, actually, these are calls. Sorry. I want to do put. And so this is actually interesting. The put and the call, the exact same premiums there. But so what I would be doing, sorry, I'm all confused. I would place a sell order, but set the limit to 25 cents. So then I would get my average fill at $5 minus 25 cents equals 475. So that's how I would do it if I was going to. I'm not going to this week, but that is something I will consider for future weeks. So hopefully that's helpful regarding AMC. The next one on the list, from this additions list, which I did not play last week, I just noticed some unusual whales activity. I just put out a video on AST, which is, or ASTS, or which is AST SpaceMobile, which I like to say SpaceMobile because it's more fun. And that is really just based on, I think you should watch that video. But there were some, let's see, unusual whales options activity on it. This large call order was placed on Friday. It does expire this coming Friday on the 16th, and so I think it's pretty risky, but it's gotten me intrigued with earnings coming up that, maybe this is going to squeeze a lot. And also, the max pain did close, let's see, at $21.30. I'm just going to make sure over here. That's what it traded at in the after hours, but it closed at $21.21. The max pain was $19 a share for Friday, last Friday, and for this upcoming Friday, it's $16, which is way lower than current price. So I think that could be setting it up for a gamma squeeze or gamma ramping, whatever, for price to go a lot higher. And so, I am not planning. Oh, sorry, I keep switching around. I am not planning to pick up one of these contracts just because, like I said, or maybe I didn't say, I previously recorded this going over some of the option stuff, but it was just too complicated, too much time spent on it. But for me, what I've been learning through experimenting with unusual whales and, trading options has been that I can't be making money when the expiration is the upcoming Friday. So this is a little too close for comfort for me. I'd be more interested in a call that expires the following week. But, with the premium being, right around $1, that's $100. I don't want to be trading options with, so the premium, because I'm buying, individual contracts. So this average fill that you can see in yellow there, that's, over, that's here, it's 99 cents based on, when this big green candle is. But, it's right around $1. And so that's $100 per contract. That's a little steep for me. And so rather than doing a call option with ASTS, I am thinking, oh, well, if it dips to 21 bucks, I will, buy a share there. And what I've been finding with options, swinging them, and really just kind of my rationale with this is like, if a stock runs 10% in a day, that's a lot. That's a pretty good amount for any stock. Sometimes they run more than that. Usually they don't. And so with call options, though, or, puts, whatever direction you're going in, I think that a 20% swing is pretty nice relative to what you could get with stock. And so, and also, it's not being too greedy, like, oh, maybe it goes to 30, 40, 50, maybe it goes to 100%, a 2x swing, calls, options, whatever, puts, they could definitely do that, but they don't always do that. And so I want to be in and out. And so taking a 20% profit on contract, an options contract, is pretty nice. So with this, I believe, I think I did the math earlier, whatever. That's like $5 more, something like that. So if this was going to like 26 bucks, or no, 25 something. I'll do the math on it. If this does get filled at 21, and actually I'm in Excel, so I could just do the math here. So let's see, 21 times 1.2. So I'd have my limit sell placed at 25.20, and then I make 20% on that. And if it doesn't, go up, or if it doesn't go up much higher than 21 bucks, I just exit my position by the end of the week. Because I want to be in shorter term plays, considering that we've had that volatility on Monday, all those moves to the downside. I don't want to be diamond handing stuff forever. And so, I do have this note here on that call option. I've just got the eye emoji there because, I'm interested in it. I'm looking at it, but I'm not going to buy it because it's too close for comfort with that expiration date. And it's also a little bit pricey for me for one contract. I don't want to risk $100. And so, but I risk 21 bucks. And if it closes, at 18 on Friday, then I only lose $3. It doesn't go to zero. So that's fine with me. But, I do think that this contract could go to above 24, if not 25.2, 25.20. Or, much higher. So, I'm very intrigued by that, largely because of that video that I made based on this alert. So, pretty cool stuff. And then, I don't have, sorry, keep switching back and forth. I'm not used to having all these windows open. But yeah, ASTS. The next one on the list here is Biora. Maybe this is going to come down to 54.24. Maybe it even did on Monday. No, it came down to a low of 55.5 cents. But yeah, for me, I'm not planning on adding to this or anything. I'm just selling covered calls on the position that I hold. And I don't even have it on the list here because I don't plan on buying it. Eventually, I will probably add it. And I guess, I probably should for best practices. I think that my dip buy level will probably be just like, 50 cents, kind of a round number. And that's like not getting so greedy that's coming down to 47.50, this prior low. It does look like they have earnings on Monday, so we'll see what happens. Maybe this would be a good time to pick up, another 100 shares. But I don't plan on buying. I do plan on selling some covered calls. And last week for the covered calls, none of them got filled, so that's disappointing. But it makes it easy for this week because I don't have to place any new orders. And actually, this one did expire. Or no, yep, that's coming up. It's still coming up. So I do have all of those same contracts. They should all be the same. Maybe some of them fill, with some volatility around earnings, and then I get $5 per contract. But last week, Biora contracts are kind of a dud. Oh well, it is what it is. And then the next one on the list is ChargePoint. And so with this one, it does look like it pulled back to the golden pocket. Maybe it wicked down to around, no, I don't think it wicked down to $1.53 because that I believe is my buy level, and I should say $1.53. That's a 786 here in yellow. Sorry for jumping around so much. Hopefully it's not too jumpy. But let's see. Yeah, and so last week I did sell, looks like 5 contracts. One of them expired on Friday the 9th, and then the rest of them will be expiring on, I guess I sold 6 of them. I missed that other one. Then 2 of them will be expiring this coming Friday. 1 will be expiring the following Friday. And it looks like this one didn't fill. And so what I have placed for this upcoming week, this one for $2.50. My average, I think, is $2.34. That would be expiring on 8/16, so this coming Friday. And, so I'd be taking a small profit, but effectively just like breaking even. And then these other contracts I will place once the contracts I had previously sold as covered calls clear, and then I can place the orders Monday morning. And so those will be from a variety of strikes from $2.50, $3, and $3.50. Going from this upcoming Friday to the majority of them being the Friday after. I do have, I believe, I know I have over 1,000 shares of ChargePoint. So like every week I get more shares to be able to sell covered calls on based on the contracts expiring worthless. So I just make a little bit of money on them. So it's kind of nice. And so my buy level for ChargePoint last week, let's see, I had it at 175. And if we look at the chart, 175 kind of based around the 618 here, that being a level I thought we dipped to. We did bounce to that, or I should say we dipped to that level, and now we bounce. We're above it, 169 or 170 in the after hours. And so I added, it looks like 17 shares there. I'm just trying to accumulate up to get, my position to be divisible by 100. And with that being said, I think to get up to being divisible by 100, I'd be adding 26 shares. And so I just have an order placed now with a limit buy at $1.53, 26 shares, because maybe we dip to that level, maybe we don't. If we don't, then I'm just going to buy 1 share every day that the stock price is below my average, which I believe is $2.34. And so, that's kind of my thoughts with ChargePoint. I feel like it could definitely go a lot lower. Maybe we're forming a bear flag now. But if we do go lower, I'll accumulate here, and then I'll just kind of like chill out and then reevaluate to then start accumulating shares in 100 share increments rather than individually or in, bundles of 10 or 26, whatever it is. And then, so the next one on the list here and in my list there is Chewy. And so for Chewy, this actually came up as an unusual whales alert. The way that I've been getting unusual whale alerts is actually through Discord. I find that to be the best way to check them easily. And then from there, I go into unusual whales to look them up. And so the contract that stands out to me, so like rather than buying a share this week, I will be buying an additional or a contract. Let's see, did I buy a contract last week? Yeah, I think I did because 69.05. That's the price that I bought this contract at. I'd get another one at 54 cents, and that is the price that this was alerted at. So 54 cents. If it dips down to there, I'd buy it again. And this is a pretty nice contract because it expires at the end of the month. So I've got like 3 weeks before it expires. And I could have taken profit. It went from 69 up to 88, I believe. And so I could have taken, or maybe it was, no, I think it was 80 cents. I could have taken profits and then maybe bought back. But I'll just buy another contract if it dips to 54 cents. That's $54 for that contract, getting my average down. But I feel like this could be, it's quite possible, Roaring Kitty buying them. I did do a video on that, so I'd encourage you to check that out, but I can pull it up over here. So let's see, this Chewy call. I actually have to go back 2 days here, but we can see this large order. It's over 5,000 contracts bought. Also, 200, a little over 200 sold in that. So that's the red being sold, the green being bought. And the open interest on that day was, we can see it down here. On the 8th was 225, and then it jumped up to over 9,000. And so that's because of, this really bullish move, this buy, and then, just more contracts being held. So I think that we could be setting ourselves up for a very nice squeeze. And so while I do have some Chewy shares, I thought it'd be fun to just kind of participate in this contract, in this swing. And so for that, I don't have a limit sell set for that one. I would think that, it could be going up more than 2x, but I might set a limit sell at some point this week. But I would want to be taking at least 20% profit on that because, I think there's a lot of potential with it going higher. And this one, I should color that yellow because I did place an order wait a second. What's going on? Sorry. Oh, yeah. So there's no calculation here. In the spreadsheet that I normally use, there's a calculation. There's not. And so this is just a copy and paste of it. So I should have that at $21. Okay, cool. So that's cool for GameStop. And let's see, is that the next one on my list here? So I did just go over Chewy. Yeah, I guess I should go over the chart of Chewy. It looks like their earnings are coming up on the 28th, so that's right before that contract expires. And so I would look to have sold my contract by then. But this could be going up a lot higher. So we'll have to see. $30 is marked here in purple. I did do a video on it, so I'd encourage you to check that out if you want kind of a deeper dive on that. And since I was just talking about GameStop, there was also a contract. I'll probably do a video on it tomorrow, and I'll dive deep into it. But basically, what we can see from the spreadsheet, GameStop, there is this contract. It does expire this coming Friday, so it's pretty risky. That's why, I'm just looking at it. I'm not planning on buying that contract, but it's for a strike of $23.50. The average fill was 47 cents. So we can look over at Unusual Whales to check that out. So this is the contract. $23.50 strike for a call expiring on August 16th. And we can see that large order that was, over 3,500 contracts bought, and then like 70, about 100, that are either mid or bid. So, that's a very bullish, very green candle. And that average fill was 47 cents. As of the close on Friday, the average fill was 46 cents. So it's kind of a discount. And just before close, it looks like it was 42 cents. So, maybe this could be going up a lot higher. But I should note that, like 47 cents, if it did close, let's see, or if the last average fill was 46 cents. It might be even cheaper on Monday, and the reason for that is because of theta decay. So I'll actually pull that options table up so we can get an idea of where that would be. And, so the reason why this does stand out, I guess I should mention that. I'll go over it in the video tomorrow. We see the open interest from Friday. It was just over 1,000 shares. The bid was about 1,000. That's the volume of basically on the sell side. But then the ask was over 4,000. So it was over 4 times the open interest. And so that's, really bullish. So that's why there's an alert there. And so it's quite possible GameStop could be running next week, or at least going above 23.50. And maybe that will be the beginning of, some big moves to the upside. And something I should mention, I forgot to with the prior ones, the amount of premium. It's always good to check that, how much is traded versus how much these orders were. And so this one's, $163,000, whereas the premium traded over the course of the day was, $253,000. So good to check that. But yeah, coming back to here, let's see. Oh yeah, I was going to go to the options table, and I should note too that 23.41, that's Roaring Kitty's average, or at least that was the last time we did his YOLO update. So I think that's kind of an important level. And if we're going to go up to 23.50, it's him getting in the green. So whether you care or not, but yeah, 23.50. These are puts. So if I look over at calls, 23.50. This is the sell price. The buy price is 47 cents, which is the exact same price. I believe this says, average fill 47 cents. But if we look over at the theta, so that's like right here, the theta decay, that says that it is 6.34 cents. So my understanding of theta decay is that because the price is lower than the strike of 23.50, every day that passes, this contract's value will go down by about 6.38 cents. And so if it closed on Friday with a buy or an ask price of 47 cents, it's probably going to be worth 41 to 40 cents at open on Monday. So maybe that's something good to swing. But because the expiration is this coming Friday, I personally am going to avoid it. But if the stock price dips down to 21 bucks, then I would add a share. And so that's why I have this here. And, for me, as you guys know, I like to slowly dollar cost average into things, or slowly, accumulate. And so I'm not being too aggressive. I would be more aggressive. There'd be less red here. Red means, I'm not placing orders, but yellow means that I do have orders placed. I'd have a lot more yellow here if I had just gotten paid, but, I'm working with what I got. So yeah, that's GameStop. And the next one on the list, kind of exciting, is Hycroft Mining. So last week, and I feel bad. I've kind of been glossing over what I did last week as far as these positions go. ChargePoint, I did mention 175. Chewy, I did pick up a share at $20. So there's this dip here on the 5th to 1975, at least during market hours. Switch over to the daily or the hourly time frame, went down to 19 bucks. And so I had an order filled at 20. So, I was able to buy the dip with that. So that was nice. For GameStop, I'm pretty proud of this. I had an order filled at $18 a share. So that's pretty nice. Let's see, why did I pick that level? Because that was this prior low, 1770. I thought price might be getting down to 18 bucks. And it looks like price actually pierced 1770, hitting a low of 1756. So I picked up a share, nothing too crazy, at $18. So I'm pretty happy about that, pretty proud of that. And then so now, looking at Hycroft Mining, I added 79 shares last week, which is not that crazy. But, that's just to accumulate up to 100 shares, and now I'll start buying them in 100 share increments by selling cash secured puts if I choose to do that. But I'm pretty happy with my Hycroft position, adding a majority of my shares at $2.36. And so if we look at the Hycroft Mining chart, we can see that the low is actually 209, 213. So I am in the red with it. But, I wasn't too aggressively accumulating up here. I was waiting for, let's see, what was that? 236. Why did I pick 236? That was the 786 here. We actually gapped through it. So, I could have, gotten a lot of shares much cheaper, but I did just kind of get that lump sum at this level. I was hoping it'd hold that support. Hopefully this is just kind of a fake out break and we start to move higher, but maybe not. It does look like earnings were reported on the 6th, and they weren't too impressive apparently. But yeah, so for Hycroft mining, what have I done? I did sell a covered call last week with a strike of $3. My average is below $3, so I'm able to do that. It does expire this coming Friday, so I'll be able to get those shares back. But if it does close above $3 a share, which seems kind of unlikely right now, then I'd be selling my shares at a profit at $3 a share. So that's kind of my way to force myself out of that. Let's see. I don't have an additional 100 shares to be selling a covered call, so I'm not doing that with Hycroft. And the buy level that I see for Hycroft, which I don't plan on accumulating more shares, at least not this week, that price is $2. And so, we did dip to 209. Let's see, during the hourly, did we get any lower than that? Nope, 209 is the lowest. And so how would I pick up 100 shares at a price of $2? So I'd go over to the options table, I'd look up puts, and I would see that, this this put at a $3 strike, we're currently below $3. I would want to sell this, but I would set my limit to not 10 cents, because then that'd put my average to 290. I'd put my sell limit at $1, and then so I'd effectively get 100 shares at $2. But because this is only monthly contracts, I would probably look over to September to do that, and so that is 90 cents. So that would be like a more feasible way to get a fill at a price of $2, or with price being above $2, and maybe it's going to be above $2 in a month. Yeah, this is actually maybe a more appealing way to do that. I'd probably sell a cash secured put at $20, so I get $20, have $200 on the side to be able to buy 100 shares, and then I'd keep that $20, and I don't think price would be below $2 in a month from now, or if it is, then I'd be picking up 100 shares not at $2, but at $1.80, considering that I get that premium for selling that contract at 20 cents. That's 20 cents times 100. I get $20. So yeah, I think that seems like an intriguing way to add to Hycroft at this point. Just selling a cash secured put. And so because I didn't get paid, I'm not going to be doing that. I don't have $200 sitting around in my account. But maybe that's something I will do next week. So pretty interesting there. But then anyways, moving along, the next one on the list looks like it's LAZR. And so I ended up actually selling 2 cash secured puts last week. I did not think the stock price would be going as low as it did. And so basically my average buy for those 200 shares is around 113. And if we do look over at the chart, it's below $1. And so what I had done, let's see, I don't have the math here, but it looks like, what I did, I believe I sold a cash secured put, I think at a strike of 150, but I think I took a premium of 20 or $30. So put my average at, 120 or 130. And then when it was right around $1, I expected it to bounce around there. And so I sold a $1 cash secured put with a limit sell of 5 cents. So I got $5 for that contract. putting my average for that buy of 100 shares at 95 cents. Unfortunately, we're closing below it. I was hoping, on Friday when it was going up, hit a high of 109, that we would be going higher and that I wouldn't have to buy those 100 shares just because I didn't want to buy, two contract or I guess, I didn't want to have that contract expire in the money because then I'd have to buy, those 100 shares. I ended up getting 200 shares because we closed not only below $1.50, but also below $1. And so that's fine, but I'm probably going to cool off. The next level down for me that I would be interested to buy at Luminar stock would be 74 cents. And then I do have that listed here, 74 cents is that dip buying price. And so the way that I would do it, since I just went over it with Hycroft, I'll do it here. And so for the 16th, if I wanted it to be 74 cents, I would sell, one of these cash secured puts with a strike of $1, but I would have that limit set to 26 cents. So then I would effectively be buying 100 shares at 74 cents, which if I look over at the chart, that looks like it could be support, this 1618 from this Fibonacci retracement here. So, that is my strategy with Luminar, but I don't plan on buying any this week because I went too heavy last week. But, what I do plan on doing, what I did last week, I sold one covered call that expires this coming Friday. That's a strike of 350. Clearly, we're not going to be closing above 350, or at least I doubt it. This one with a strike of $3 did not get filled. That would have expired on the 9th. And so I do have, because my average is so low now, I've accumulated so many shares. My average is still, I guess, more than 2x, or right around 2x what the current price is. But I will sell a covered call with a $2 strike that expires on the 16th. I have that order placed now. I will place these other ones once my, the shares that I have clear because from expiring contracts that expired worthless, so I get the shares back. And so these would be ranging from $2.50 to up to $3. And with the expirations from August 16th up to August 23rd. So, that's going to be a nice way to make a little bit of money. On the shares that I hold, which I guess I think I own 800 shares of Luminar now, which is pretty crazy. I've been buying more aggressively. I should have been buying less aggressively, but whatever, it is what it is. And then so, the next one on the list, this is Micron Technology. I bought 2 calls on this, and we can look over, I guess on my spreadsheet, I think I have it noted here. These expire in a couple weeks. It's a $108 strike. This is something I was alerted to by Unusual Whales, and the average fill was 38 cents. And so what I did, let's see, we can see down here for these MU ones, I bought one at 38 cents, which is, the average fill, and I got another one at 28 cents. So my average is, whatever the middle of that is. Mental math, kind of tough right now. I'm tired. But yeah, I think that I have a limit sell placed at 40 cents. So that would be about a 20% swing for me. So hopefully that fills this week. If not, I'm risking $66 on those contracts. But I'm gonna wait to see if it does go up to 40 cents. And so I can look over at Unusual Whales here, Micron Technologies one. This was, let's see, when was I alerted on this? I think I was probably alerted on this. This would have been on Friday. So there's this one over here, average fill of 38 cents. It's 2,000 contracts. On the ask side. And so I probably would have avoided this one, if I, reevaluating it, because there was a lot on the bid side, or at least, almost half, not almost half of it, but, a quarter of it was not on the ask side. And so I think that this is more risky. But then it looks like there was this other one at the end of the day. It's 50,000 premium, 54, almost 55,000. And so, that suggests to me that there's still bullish sentiment, like this hasn't gone away. And so we'll have to see. Overall premium traded for the day, 175,000. This candle represents, let's see, over 100,000, about 115,000. This one represents 55,000. So, the majority of that premium was all on the buy side. So, we'll see if that one ends up paying off. I've just done this Fibonacci retracement here to maybe it bounces, maybe it bumps its head around 102, maybe it gets to 112. This is the 50% retracement. So maybe it is finding support there, but maybe it's a dead cat bounce before it continues lower. So I'm hoping to get out of that position before the end of the week, but we'll see. And then the next one on the list is going to be NEO. And so that one is another one. I've not really been too aggressive with NEO, but over the past week, I did pick up 100 shares at an average price of $3.70 by selling a cash secured put. And the strike for that cash secured put was $4 a share. If we look over at the chart for NEO, it closed below $4 a share, but above 370. So, I did get shares at a discount. I could have gotten them at, 363, which is the low for the week. But I picked up 100 more at 370. And I think my average is around 450 or 440. I think it's around 440. And so what I did last week is because I had now I have 200 shares. I sold a covered call with a strike of 550. My average was previously a lot higher. Now it's around 440. So the strike of 550, that was above my average. Now it's definitely above my average. That expires this coming Friday. And so, if that closes in the money, that's great. I make some money. If it doesn't, that's fine too. I make $1. And then I will be placing another covered call order to sell a call with a strike of 450. That would also be expiring this Friday. That's just to make 1 cent, but then that would be forcing me out of my position, or at least half of my position above my average, and I'd have $450 to use elsewhere. And then thinking about like the next dip buying level for NEO, that is going to be at 361. I don't have an order placed there. But if I do flip over the chart, why am I thinking 361? That's just this prior low. So, that is, maybe we get a wick down or, a wick just below that, but it bounces. And so that would be the next level that I'd want to add, 100 shares at, but I'm not planning on doing that this week. Next week, it'll probably be a little while before I add any more to my NEO position, because I did just go pretty heavy. Basically just more than doubled my position over the past couple weeks. And then so the next one on the list is Palantir. I did pick up, and by the way, I'm just going to ignore this unusual whales alerts and stuff. I find that, in order to take advantage of unusual whales and the alerts, you really have to be paying attention to the chart when you get the alert, because the premium may have gone way up higher or lower in the time that you get the alert and the time you look at the chart. And so these are all kind of outdated, and so I'll try to do unusual whale watching periodically, and so that can maybe be some useful insights in how to utilize unusual whales. But anyways, this order for Palantir, 2236, why did I have an order placed there? And so 2236 was the 786 here. So I did pick up some shares, or 1 share at 236, and then I also have one at 2185. I added another share down there, and you can see that here. For my weeklies, this was that share that I bought. This was a contract that ended up I selling for $5. So you see that here. So I lost some money on that. And this one, $11. That's a contract that I hold, and I plan on adding to that. So I'll go over that in a second. But I just wanted to go over how I did buy last week. I did buy this dip, so I'm pretty proud of that. And then let's see here. Talking about this week, Palantir. So I'm going to just talk about this contract rather than talking about shares, buying shares. I saw this contract that seems really bullish for Palantir. It's a $35 strike with price around $30. That is a pretty massive move to the upside, and the expiration is not this Friday, but next Friday, and the average fill for that was 11 cents. So I picked up one share there, and I do plan on picking up another share at 9 cents. Or sorry, not another share, another contract at 9 cents. So I put my average at 10 cents for 2 contracts. And yeah, we can look over at the unusual whales alert for that. Let's see, was on Friday. It looks like there's a lot of activity. Here we can see that the open interest on the, let's see, I'm going to do this over 2 days because it includes this one, I guess. But yeah, if we look at the open interest at the bottom here for the 8th, it was at 905, but then the volume traded was more than that. And then open interest, so contracts being opened, so calls, these calls being open, suggesting that people are still bullish. It more than doubled between Thursday and Friday. And then on Friday, if I switch this back to, so this was a bullish move. This green candle here, so that little pop-up is kind of annoying. I don't like how it just relentlessly hovers. But there's that green candle right where the cursor is. And, on that day, the open interest was 905, and the ask for this order was 810, so almost as much as the open interest. And, then just looking at this for one day, we see all of these green candles, some of them mixed, but, the majority being on the ask side or the buy side. And those were, all filled kind of like in the same time range. And so the open interest from Friday was about 2,200, but the volume traded was 10 times that, and the majority of that volume was on the ask side, so buy side. So that suggests that Palantir is looking pretty bullish based on this options activity. And so rather than just buying shares, because I do have, I believe, 5, not a huge position, I thought, I'll participate in this, and, I would sell. I don't know, with this one, I might not have a sell price, a limit. I think, when it 2x's, when I get 100% swing, then I sell that. But, maybe that doesn't happen, and so I'll adjust that over the course of this week. If I need to lower that maybe down to 20%, I think that's a nice swing, while I hold my shares. And then looking back at the chart, we did get to, a higher high than this one at 29.83. And we did close above that. We did wick up here, so maybe we'll see a little bit of a pullback. But I do think it's really good that we closed the week above that prior high. And so, yeah, I think that there's just a lot of strength in Palantir. And, for me, in the shares that I hold, not that many, I want to be really just accumulating Palantir for the long term. But at the same time, if stuff really starts to get oversold, maybe I want to trim. I don't think we're there yet. I think that this is going to continue to go higher. Those contracts will be worth more. And, the shares that I hold, I'll be happy to continue to hold them to experience, it going much higher. But, if we do start to see maybe the RSI get into the overbought territory, then maybe I'd want to trim, a couple of shares out of my position to be able to buy back lower, or just to, capitalize on the volatility to the upside. But yeah, that's pretty much my thoughts on Palantir. I think it's going higher. I think that the unusual whales options activity is really insightful. And so I'm looking forward to either adding to this position that I have at 9 cents. And actually, let's see. If we look at the options data, this is a nice lesson for all of us. So it closed on Friday. It looks like average fill 11 cents for that contract. If we look over, let's see, that's the $35 strike, 823. And so if I look over here, these are calls, $35 strike on the 23rd. That closed at a buy of 13 cents. But if we look over at Theta is about 2 cents. So yeah, this could be opening up at 11 cents. Maybe it dips to 9. Then my order would be filled. I'd have another contract. And, we'll have to see. But I do think that this looks really bullish. And looking at the chart, it closing, above that prior high, it looks just really good. And I will be doing a video on Palantir tomorrow because I think it just looks awesome. So yeah, look forward to that, or check it out. If you're listening to or, watching my very disorganized trading plan, after the fact, I check out that Palantir video whenever it comes out on Sunday. And then here, the next one on the list, I like to look at the chart here. Next one is Plug. I did sell, another cash secured put that with the order fill, effectively at $1.93. So I think I sold it at with a strike of 2, and I took a premium of 7 cents. And so looking at the chart here, it closed 3 cents below $2. So, whether that's good or bad, I've got all this crap drawn on here from the earnings call. I'm going to have to clean this up. Oh, crap. I need to do a Plug Power video as well. That reminds me. Dang it. Plug, Palantir, and GameStop. So I'll try to get all those out tomorrow, but I got a lot of other stuff to do. But anyways, 193, that's below the price that it closed at for the week. So, I'm happy about that. The next dip buying level I see, which I do not have an order placed at, that would be $1.86. And the reason for that, maybe I have to switch over to the hour time frame. Yes, because the low during the pre-market was 186, so that's why I would buy there. But I don't have any orders placed, don't plan to place any orders this week, not until after I get paid at least. But I'd reevaluate, whether I'd want to do that in Plug, Hycroft, Luminar, any of those, or something else. But yeah, so 186 there. And I do have enough shares to sell some covered calls. So last week I sold, 3 contracts, taking in a total of $4. All of them expired Friday worthless. And, like I had mentioned before, I believe I made $32 selling covered calls last week. We'll see how much I make this coming week. So I do have a number of Plug shares to be selling some cash secured puts, to be bringing in about $6 there. Expirations between the 16th and the 23rd, ranging from $2.50 up to $3.50. So we'll have to see with that what happens there. And then now, I think no more covered calls for the rest of this video. So I'll just be getting into these. And the next one on the list is Rivian. And maybe I'll remove Ed so you can see these other ones. But yeah, so what did I do with Rivian last week? I believe I bought the dip. No, actually, this one I did not buy the dip. I was a little bit greedy, $12.31. If we look at the chart and, consider the pre-market trading as well, I went down to a low of $12.63. So, a little bit above my $12.31, which is based on, this level here. That's the 618 retracement from, let's see, the 618. Right here, 12.31. So that didn't get filled. That sucks. 13.30 would have been, and currently trading above that. And so I believe what I did, maybe I adjusted my buy to 13. I'm not sure. Rivian 13.30. No, I adjusted it to that red line level. Let's see what was the low on the 5th. 12.96. So I think actually $13 would have been a really good fill level. And so I might want to. No, because we did dip down to 13. Maybe that's the low. And so if we dip to a higher low, I would think that's 13.30. So I'm going to wait for that. So that's kind of my strategy with Rivian. Not too exciting, just one share. Let's see, Rocket Lab. I don't think I put too much thought into this, to be honest. I just don't, I'm not being too aggressive buying stuff this week. But so as far as Rocket Lab goes, I did have, the order filled at 450, dipped down to 420. Is that right? It's such a cool dip buy level. But yeah, 450, why would I see that again? Yeah, it could be, coming back down below this 236 and, wicking down to like 450. So let's see, because this is not like the spreadsheet that I normally use necessarily. So I am going to note that Rocket Lab, I should place RKLB a buy at 450. Although it's possible, to be honest, I may not have 450 in my account, but once I sell some covered calls, I will. So that will be one that I want to add to. So I should make this yellow, but right now I don't have an order placed there, and that's just to accumulate 1 share. So nothing too exciting, but with price being, well above 5, a pretty massive gap up here. Although this does look like a spinning top, it could be, and it did get rejected from that, downtrend. So maybe we do see a pullback for maybe 483 actually. Yeah, I would think 483. I'm going to change that to 483. So I'll change it so you guys can see it, but I am not going to change it to yellow because I don't have an order placed there. But yeah, 483, I should do that. Okay, and then so the next one on the list here is SoFi. And, maybe there's some bad news for SoFi bulls, but I ended up closing my position, because like here, I'll pull up the chart, even though I don't have it in my holding list anymore. Let's see. So SoFi, I had talked about this gap being filled for quite some time. People telling me I'm crazy, all this stuff. I lost conviction in that because it's like, well, maybe I'm wrong. But it did end up pulling back to that level, and I see another gap down here at 541. I think 550 is a good level to be maybe adding into, but this is also, below this, coming to this downtrend, so it could even go lower than 550. So I'm just gonna wait, and I do not plan on buying any more SoFi until it hits 550. And I sold all of my shares last week at 669, and we can see here, let's see, what am I looking at? SoFi, I had a pretty small position, $33.43 is the money I took out of that position, made a little bit of profit. I did buy another share at $6, but I feel like there's too much emotion around this. Whenever I say I think it could be going to 6, people respond to me in a very it's never going to 6. And it's like, you don't know that. It might. And so for me, as far as my risk threshold, my risk tolerance, and the fact that I think that we might be at the start of a bear market, I don't want to be gambling on stuff that I feel like could be going lower, and I think this one could be coming down to 550. So I'm going to wait until 550. I do have an order placed to buy 1 share at 550, although I might swap that out for, let's see, the Rocket Lab one, just because, I can do that. That's even. And then once I sell some sell some covered calls, then I would, replace this order. But yeah, I got out of it just too speculative, so I'm not worried about it or anything. But yeah, I'm not long SoFi. So that's not to say I'm bearish. I just don't think it's at the price that I want to buy at, and so that's fine. And then the next one on the list here is Tilray. I'm actually going to pull back to my list here, and I'm going to have to actually search Tilray because I sold my share. I had 1 share left. I sold, the majority of my shares up here at 202 at this level here. I held one for the reason of maybe I'm wrong and it goes higher, and I just wanted to hold that to see what happens, but I was right. This was the top. It pulled back. I sold my share at basically break even, which is $1, whatever. It doesn't matter if I lose on that. It's such a small amount. But just like I don't want to be spread too thin, and so I decided, Tilray, cannabis, just a little too speculative. So I decided to exit. And so, I did. And so I'm sorry if you're long cannabis or long Tilray or whatever. It's quite possible it will be going up higher. And so let's see. But it also could be, a bear flag here. It does look like there's a lot of resistance here, a lot of levels. And, is it above or below? I'm not sure. It could be playing games with bulls and that this is actually a bear flag. And so for me, maybe my level's always been right around 170, but I think that I actually have this listed as 175. Maybe that's a good dip buying level. It corresponds to a little bit above the 786 here. But maybe, 175, just leave it. I'm not putting too much thought into that because I don't plan on buying any more shares there, at least not this week. But yes, that's why I have 175 here. And then the next one on the list, I'm really excited about this one. I had talked about Tesla coming down to this range, 185 to 189. I posted a video about it. Tesla videos that I do don't usually get too much traction. I'm not really sure why. I did post a short of Gareth Soloway talking about price coming down to this level. And so I did on Monday have an order placed at a price of 185. And, that was filled. So now I am a Tesla shareholder. So I'm pretty stoked about that. It's just one share. But I am excited about that. I'm in the green with it. I did buy that dip. I do think, though, that it could come down further, and I have the next buy level at 169, and that for the reason is because, there's a 786 here at 167.09, sorry, $167.09, and just, maybe it doesn't get exactly to that level, and just having fun with it, 169, I feel like price could come down to there before, bouncing, because we have just been dead cat bounce. Maybe this is another dead cat bounce. So I'm a little bit uneasy. Maybe, I do want to sell my share, take a $15 profit, but maybe it doesn't come down to 169 because there is all of this consolidation here that could be acting as support, and maybe it rallies up to 300, and then I'd feel like an idiot for missing out. So I'm just going to hold my one share because I like Tesla, and I think that whether it does go down to 169 or it does take off, I think that it's, one I want to hold. So I'm excited about that. And I'm proud of myself for dip buying that. I mean, the low on Monday was 182. If I flip over to the hourly time frame, 181.14. So, I bought pretty close to the lows there. And, I've been green the entire time since. So, I'm just really, really proud about that buy. I'm proud about my thesis and that I stuck to it, following earnings. I'm just really proud of myself there. And, so I'm happy to be holding that share. But then the next one on the list, let's see, Unity Software. It looks like I did dip buy this one as well. And, let's see. 1432, we got a low of 1390. I think I did, update the buy level to 1350, so breaking a little bit lower than that. We are, after all, in this downtrending channel. But, I think that we're near the bottom, and I think that, we did see this pretty big wick up on wick to the upside, but then close below on Friday. I think that, if it does dip, I'll just add another share. I think I only have 3. Maybe I just have 2. I don't have a big position, but my thesis is pretty simple, that we'll be going back up to that midpoint, if not the top. I'd probably sell my shares at the midpoint in all honesty. But, that's just, I'm trying to be a little bit, executing trades more than just holding on to them. And, so that's another one that I'm proud of, that I bought the dip. That. And then, so the next one on the list is one that I'm really not that excited about, is VLD, Velo 3D. This one, I don't know if it's ever going to stop bleeding. This to me looks like it could be a bear flag. I think that they have earnings coming up. Let's see, on the 12th, so on Monday. Maybe it takes off. Maybe that I've lost my conviction in this, that maybe it's going to go higher. But I did have an order filled at $2 a share. It was just one share, so nothing crazy. I have been accumulating a little bit more each day. But yeah, the low during market hours, the 52-week low is $2, and I bought a share at that price. So that's pretty cool. The hourly time frame, let's see, the low was 181. So could have gotten that a little bit lower. But yeah, what I've decided with Velo 3D is that my average is around $4 or something up here. I don't have enough or I don't want to be spending enough to be getting my average down significantly, because I mean we've just broken all these levels. Maybe earnings gives this a boost and it starts taking off. That would be great. I just feel like it's way too speculative. I want out. I'm not going to cut my losses because I have fewer than 100 shares, so it's not a huge risk financially. But I don't think it's worth dollar cost averaging, getting another share every day, which I have been doing. And so for me, my dip by level 4, let's see, what am I looking at? Velo 3D is 201. The reason I have it at 201 and not $2 is because maybe we get a wick down to 2 or whatever, but the order's not filled. And so I just want to add more aggressively at 201. And so whether it's every day or every week, I'm going to add, this is the additions column, to that. So I would just stack more shares that I would be buying at 201 and, just to try to get my average down and then to get the F out of that position, because it's too speculative in my opinion. But yeah, so the remainder are going to be the ETFs, and so I'll talk about those. And yeah, so I'm going to start with BOIL, which I no longer have on the holding list. So I'm going to have to go over to natural gas. And so I believe I sold my position on the 8th at a price of $10.32. I think I had 4 shares, so nothing too crazy, but I made, about $4 on that. So that's percentage-wise a pretty nice trade. Really, Gareth Soloway talked about maybe this being the top, and it does look like, this is BOIL, so this is not natural gas. This is the 2x leveraged to natural gas ETF. But from this retracement that I've done, which is based on, or is that an extension? No, that's this Fibonacci extension. The 50% level is at 1050. And we did get, some wicks up to there. So maybe we're going to start getting into some resistance, turn around, and then maybe $8 is the next buy level, which I did buy some at. If I do flip over to the hourly time frame, we can see that it did go lower than $8 a share, $7.97. And so we can see, if I do flip back over to here, that I did get a share at $8 a share. Could have gone more heavy, but I'm just trying to get better at executing at specific levels and getting in and out of trades. So I no longer hold BOIL. I did make more than 10% on it, so I'm happy about that. And here, I would buy more at 8, but I don't have an order placed. KOLD, let's see, that is the 2x leveraged. I meant to say 2x leveraged in case I said 3x. I meant 2x. 54 would be the dip buy level for KOLD. Although, maybe we are going to be going up here right around 65. Maybe that's the bottom. But, I'm not going to enter it until, it comes down to 54. I'd consider it, but I don't plan on it. And then moving over to the short ETFs, these were great. I made money on these on Monday on the 5th when the market was tanking. I executed beautifully. I did do a video on shorting the market in semiconductors, and so I was holding SOXS. I sold my position just before market opened on the 5th at a price of $39.69. Of course, just having fun with the 69 cents. I did go over, why I picked that level in the video that I did on shorting the market. And, I could have sold a little bit higher, but I think I timed the top pretty nicely. I'm really proud of that. I do have an order placed to start accumulating again, just one share at a time. That worked for me over the course of the year, accumulating SOXS. I made money on that, even though I was red for quite some time. I ended up making a profit on it. And so my next dip buying level is $28. Did not change from last week. And that is, really just because there's this gap fill here at 28.46. Maybe price comes down to that. Maybe it wicks lower, 28, round number, get a fill there. And, maybe that gets filled. Maybe it doesn't. I am not sure. But that's, I just got that order placed there for now. It's just one share. And then SH, I did have this previously at 11.69. This is the short SPX, this is the short S&P 500 ETF that's not leveraged. Given that price is right around 1169, I feel like they'd get filled right away. And let's see, there's this gap here. This close was at a price of 1152, so I'm just going to the gap fill, 1152. I still hold some SH because it didn't get up to my average price, which I think is 1269 out of coincidence, so don't judge. So I'm just waiting to, or no, actually, I think 1269 is what I would sell at. I think my average is maybe 1253. I don't know exactly. But yeah, I just want to get that average down as it does pull back. And, I'm confident I'll be able to make money on this. I do think that that we're going to see this downside continue, but I think we need to see a pullback first. And that means that, I think the stock market's going to go up some more. But yeah, to fill this gap here, 1152. The next one on the list is the SPXU. I did sell that last week as well. I'm not sure exactly of what my sell price was because I don't have the math here. But we can look over at the chart. I did sell just like what I did with SOXS. I sold before the market opened on the 5th, took profit there, timed the top pretty nicely. And, I would be buying back at, let's see, my price is $29.21. I previously had it at $30. I lowered it for the reason that, there's this gap here. And, rather than being aggressive, just buying at 30, which does correspond to, this level here approximately, I just wait for that gap to be filled. I don't need to be aggressively buying. Maybe I'd be more aggressive if I had just gotten paid. But, so I'm just waiting for that next paycheck before I start getting aggressive with these short positions. And like I learned from the last experience, it's better to slowly add to these and then, take profit when you can. So that's what I did. That's what I plan to do again. I don't have an order placed on the SQQQ. That is one that I also sold the top during the pre-market on Monday. So very proud of that. The level that I would want to buy at, I feel like really like 922. And so let's see. I have it at 820. Yeah, so I guess, I'm just going with this gap. The SQQQ, this is one that, maybe I want to adjust that to 922 because that was the close on the 1st. So SQQQ, I don't plan on placing an order to buy it, but maybe 922 is a better level for that. And so, 922. And did I adjust the Rocket Lab one? Yeah, I did adjust that too. So those are two that, I've adjusted. And so that's pretty much everything on here. As far as, I introed it in the other video, but it was just like too much stuff going on. But these are effectively, just orders that I added to. I now have AMC position divisible by 100 shares. But a lot of these were just options contracts that I swung over the course of the week. Some of them went to zero, like this one for Beyond. This one on HYMS went to zero. Palantir, it's this $20 contract here. I ended up selling that for $5. I could have sold it for break even, but I just got a little bit antsy. And so this is just, what's the amount out that's in green. Those are ones that I made money on. The ones that are in red are ones that I lost money on. And I'm just trying to swing more based on unusual whales options activity. I think that once I, recognize why did these ones fail? Why did they go to zero? It's because the expiration was within the week that the order was placed. I need to have at least, more than 5 days between when I buy a contract and when the expiration is. Ideally, more than 2 weeks. And so those were mistakes, lessons learned there. This, I learned this lesson earlier and then I repeated it. And this is like, don't do this again. So I need to be learning from that. But I did take some nice profits, some of them at stood out that I didn't necessarily expect to make money on. This one on Dropbox, I made 20% on that. This one on GameStop, made 20% on that. Then also Lyft, 20% there. Meta, I got pretty spooked by this one. I'm not sure if it's, what it would have closed at, but I took $1 profit, so nothing too exciting there. Palantir, I lost money. We'll see what happens with MU. Rivian lost about 50%, about $33. That kind of sucks. That was swinging around, the earnings report, so it's kind of sketchy there. And then everything else, United Airlines, I made 20% on that. So, pretty nice. But, that is basically my trading plan. Sorry if it's a little disorganized this week. I'm just tired, trying to be productive on the weekend, but, I put this off too late. So yeah, I'm going to add timestamps to this, and I hope that you guys have a wonderful week of trading. Hopefully what I went over in this one was good. Let me know in the comments, though, if you found this to be too disorganized. I can try to refine it for next week. But, I do appreciate you guys. Thanks for being members. And if you're not members, and if you're watching this after the week is over, please make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel and become a member if you want to have access to this before the week starts rather than after it ends. But yeah, thank you so much for watching. I hope you guys have a wonderful week of trading. Take care, you guys.